The people like me and you who have been mocked as crazy for owning gold for all of these years, it's now become the second largest world reserve asset, surpassing the euro at the central bank level. The smart money, the big money, the money that's closest to the information is now accumulating gold at a level no one has ever seen before. And the interesting part is removing counterparty risk, whether it be standing for delivery off of COMEX or the LBMA, getting it off the exchanges, or the 40 central banks that have requested delivery from the New York Fed or the Bank of England, the traditional safe havens that gave access to the LBMA and the COMEX, or in this case, the opposite in the equity market, selling as the public is buying. Public's nowhere to be seen in the retail market in metals. It's the ultimate contrarian indicator.
Gold has officially become the second largest global reserve asset, surpassing the euro, as revealed by a recent European Central Bank report. Gold's reserve share rose from around 16.5% in 2023 to 19% in 2024, overtaking the euro, which dropped to 16%. Central banks worldwide have increased their gold holdings in response to persistent geopolitical tensions, inflation fears, and concerns over the reliability of dominant currencies, notably following Russia's invasion of Ukraine. Andy Schectman, CEO and founder of Miles Franklin, believes that those who held on to gold despite years of criticism are finally being proven right. He explains that this shift isn't random. It's a deliberate move by informed investors who are steadily transitioning from paper assets to real, tangible wealth, such as physical gold. According to Goldman Research, global central banks are expected to continue accumulating approximately 80 tons of gold per month through 2025, up from earlier projections of 70 tons, indicating a robust and ongoing shift away from traditional reserve assets. In each of the last 3 years, central banks accumulated more than 1,000 tons of gold, compared to an average of 400 to 500 tons over the preceding decade, according to historical gold demand and supply data. According to a survey of central banks by the World Gold Council, WGC, nearly all respondents, 95%, expect global central bank gold reserves to increase over the next 12 months. A record 43% expect their gold reserves to grow in the same period, with 0 respondents anticipating a decline, while the Bank of England remains the most popular vaulting location for gold reserves, 64%. A significantly higher percentage of respondents reported some domestic storage, 59% in 2025 compared to 41% in 2024. Schectman stressed that these buyers are focused on removing counterparty risk, standing for delivery off COMEX and LBMA, and even demanding gold back from the New York Fed and the Bank of England. We're about to explore the video, but first be sure to subscribe and click the bell icon to stay up to date with our latest uploads. Your feedback in the comments is always appreciated.
The institutional investors have been selling stocks almost every week since 2025. Those would be the very, very wise hedge funds and big money investors. Well, the second and third largest investors in NVIDIA just dumped 194 billion worth of stocks last week at the same time. Their board members, they dump, but keep that in mind. So institutional investors have been dumping stocks every week in 2025. Since the first week of June, professional investors have sold 4.2 billion in equities. The 4-week moving average of selling is 2 billion per week. So you have insiders dumping stocks. At the same time, the U.S. households, through mutual funds and pension funds, their financial allocation to stocks hit a record 53%. It's larger than the dot-com bubble, which was 51. It's the largest allocation by the retail public to equities ever. And so when you talk about insiders, people in the know, dumping, and the public running in, what could possibly go wrong? Now let's look at it in terms of precious metals. Same thing is happening in reverse. You've had the largest deliveries in the history of the COMEX, month over month over month over month. The May contract was the largest delivery ever in the history of COMEX in both gold and silver. These are the very knowledgeable investors. They're the wealthy ones, but they're the ones closest to the information. Who is taking possession, for example, of 8.5 billion worth of gold in May, 5 billion nearly in March? Who's standing for delivery on all this? The largest silver delivery ever in the history of the COMEX. At the same time, I've been saying on all the shows I'm on, where's the public buying metals? They have gone headlong again, as this statistic is telling you, into the risk on trade again. The 7 stocks, they've run back into them at the same time as the insiders are running the other way, waving at them. Thank you for taking my shares. Goodbye, and run out the door. So the insiders are selling equities and buying commodities and standing for delivery, as the public has shed commodities and is running headlong into the burning fire that is the equity market. Now, what could possibly go wrong there? This again will just foment the divisiveness that this country has been engulfed in over the last 4 years, and it's not a good thing. Really isn't. And I think it will only get better, or worse, rather. The people like me and you who have been mocked as crazy for owning gold for all of these years, it's now become the second largest world reserve asset, surpassing the euro at the central bank level. The smart money, the big money, the money that's closest to the information is now accumulating gold at a level no one has ever seen before. And the interesting part is removing counterparty risk, whether it be standing for delivery off of COMEX or the LBMA, getting it off the exchanges, or the 40 central banks that have requested delivery from the New York Fed or the Bank of England, the traditional safe havens that gave access to the LBMA and the COMEX, or in this case, the opposite in the equity market, selling as the public is buying. Public's nowhere to be seen in the retail market in metals. It's the ultimate contrarian indicator. So yeah, I think things are about to get very interesting, and the war is a sideshow to me. I think the war is over. I truly do. I've been following it very closely. The Iranian ability to do anything at this point has been neutered. There's a wonderful station called Tusi TV, Tousi, I believe, who has done an amazing job of showing what's been happening step by step by step by step. But I think it'll be over very soon. I do. Hopefully, there's no more bloodshed. Again, you see war in the Middle East, you see war in the Ukraine, you see craziness. You see mixed feelings on both. Again, just more and more divisiveness. So the guys' name are Mark Stevens and Tench Coates, second and third largest individual shareholders and board members, dumped a combined 194 million worth of Nvidia shares at the same time. Anyways, so yeah, this is a situation where things are getting nuts. You look at the Treasury market. The U.S. Treasury bought back another 10 billion of its own debt, matching its largest Treasury buyback in history, which was done 2 weeks ago. So they're buying back 10 billion of its own debt, long-term duration debt, and they do that by selling short-term to finance the buyback of long-term, because there's no demand for the long-term. It's the same reason the Fed had to come in 3 weeks ago and buy $50 billion nearly of a sampling of 3, 10, and 30-year treasuries. There's no demand. They're trying really hard to not let interest rates spike. That's what we see happening. That's a loss of confidence. Who the hell wants to buy our treasuries? We're inflating away our problems. We want to raise the debt ceiling. We have another $2.5 trillion on this year's deficit, and yet this comes in the face of Doge, where $900 billion was saved, right? That's what they saved.
Yep.
That's 37 hours worth of government spending. That's it. So the whole thing is crazy.
For decades, gold has been the undisputed leader in the world of precious metal investments. But a quiet shift is underway. Silver, traditionally associated with ornaments, is now emerging as a key player in strategic and thematic portfolios driven by industrial demand and the clean energy transition. In May 2025, COMEX recorded the largest ever gold delivery for a minor month and the second largest silver delivery since 2021, including a record-breaking delivery in May, signaling massive demand for physical metal. According to Andy Schectman, we're currently witnessing one of the most extraordinary developments in the history of the silver market. He believes this is the closest we've come to an official warning that the gold and silver paper markets are nearing collapse, a scenario that could drive prices in fiat terms far higher. Now let's redirect our attention to a video.
You have the second largest short position in the history of the COMEX market ever in silver right now.
That's huge.
And it's still going up. What does that say to you about the strength? They are being challenged by the biggest money in the world, by the Indians, by the Russians, by the Saudis, by the Chinese. Their sovereign wealth funds are saying, nah, it's okay, we'll stand for delivery. We don't care if we have 12 margin calls. We're going to stand for delivery. We have more money than you do. We're going to stand for delivery. That is the difference. So you have let me just see if I can give you some even more crazy numbers. I think I can. I might not. What is the total number of ounces that are? The short position is like 900 million ounces. And so you have, and how much of that is naked? And so let's take a step back and look at what the ECB, the European Central Bank, just said publicly last month. The ECB warned of increasing counterparty risk in gold derivatives for the euro area. In the May edition of the Financial Stability Review, the ECB added that a significant share of these gold derivatives, and you can add silver into that too, were over the counter and not centrally cleared. That means they were traded in London and not traded and COMEX, which is centrally cleared. The over the counter would be the way that the LBMA is. It's an over the counter market, peer to peer in essence. There's no central clearing authority like there is at COMEX. The big point to take on board is an official recognition that stand for delivery obligations on COMEX are behind the crisis. They continue since November. Warehouse stock, Nadir, 26,470,000 ounces have stood for delivery in gold. Eurozone banks have swapped their gold for paper, and the gold is disappearing in deliveries. Behind the ECB's public concern is a far deeper one. It is as close as we can get to an official warning that the gold paper game is coming to a very nasty end, likely to drive gold measured in paper currencies far, far higher. Incidentally, the same problem exists in silver without central bank participation. So this is exactly what you have. You have a situation where forever these banks, these exchanges in the West and the banks that traded on them were able to hold down the paper price because no one stood for delivery. Nobody did, less than 1%. And now all of a sudden, whether it be in London, even in Shanghai, and in the United States off of COMEX, the deliveries are exceedingly massive. And these people are freaking the hell out. I would say that silver has a better asymmetrical pattern, which means the lowest downside and highest upside. I think silver still oil still ultimately a good buy, but I'm not looking to see it break out the way things are right now. The only way it does is if something happens in the Straits or the US were really dragged into it, and then you see other countries get involved. God forbid, that's World War III. Let's hope it doesn't come to that. But I think if it were me, I think silver is the most undervalued asset on the planet. And again, seeing the largest delivery in the history of the COMEX market in silver happen in May should just be a very eye-opening event for people. They should look at that very closely. The people at that level who are taking in billions of dollars worth of silver, they don't do that just for shits and giggles. They believe that there's something big coming. And they've been right all along. Look at the gold imports and what the price of gold has done this year. So I would say the same thing will happen with silver.
Global financial dynamics are shifting as central banks increasingly favor tangible assets over traditional paper reserves. Gold has overtaken the euro to become the second largest reserve asset, driven by rising geopolitical tensions, inflationary pressures, and a decline in confidence in major fiat currencies. Meanwhile, silver is gaining ground not only as a monetary metal, but also as a strategic asset essential to green technologies and industrial applications. Record-breaking physical deliveries of both metals on COMEX, particularly in May 2025, underscore a growing trend among institutions to shift away from derivative exposure and secure tangible assets. This transition reflects a more profound concern about systemic risk in the financial system, signaling a possible turning point in global monetary policy and asset allocation. Are you concerned about the risks in the paper markets for gold and silver? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.